With the 2024 US presidential election concluded, Donald Trump has returned to the office, making him the only former president in the US history to serve non-consecutive terms. His return has already caused the US stock market, the Bitcoin market, and the mortgage rates to fluctuate, with mortgage rates approaching 7% again. These changes raise important questions for real estate consumers and investors, especially about how Donald Trump's policy might affect the housing prices and affordability, particularly in high cost areas like San Francisco Bay Area. Hello, everybody. This is Bojie He, your local Bay Area real estate expert, and welcome back to my channel once again. Now, the housing affordability and supply shortage have been ongoing issues nationwide, and these were key concerns for voters in this election. I've created a video comparing the real estate policies of both candidates, which you might find helpful, link in the description. Now that Trump is back in the office, let's dive into how his return would influence the housing market in the coming years. Trump's housing policy are likely to focus on a few main areas, each with distinct impact on the housing market. First is deregulation. Many analysts expect Trump to pursue deregulation in the housing sector, which could make it easier for developers to build new properties. An increase in housing supply would help alleviate some of the demand pressures and could improve affordability over time. Secondly, the tariff and construction costs. So on the other hand, policies like increased import tariffs and a stricter approach to immigration, the illegal immigration, might raise construction costs. Higher tariff could increase the cost of building materials, while stricter immigration policies could reduce the labor pool for construction jobs. Both factors could lead to a higher home price. Last but not least, the consumer purchasing power. Now, regardless of construction costs, demand will largely depend on consumers' ability to afford homes. Even if prices remain high, a strong consumer purchasing power can keep demand steady. Therefore, the housing affordability under Trump may hinge on how his economic policies would affect the household incomes and mortgage rates. To get a clearer picture of Trump's potential impact, it's helpful to look back at how the economy and the housing market responded under both Trump's and Biden's recent terms. Now, Trump's first term was between 2016 to 2020. The economy experienced significant growth, driven by tax cuts, raising stock markets, and improved consumer confidence. Interest rates increased, and the unemployment rate fell into a 50-year low. But challenges like the trade war slowed manufacturing growth, and the COVID-19 pandemic caused widespread economic disruption. During this period, some housing markets saw price gain due to strong demand, though supply shortage and raising rates temper affordability. Then after that, Biden entered the office amid the pandemic. He implemented large-scale stimulus programs and accelerating vaccine distribution. The economy initially rebounded with stable stock market, job growth, and improved consumer confidence. However, inflation quickly became an issue, rising the cost of living and impacting housing affordability. Mortgage rates eventually rose, further putting pressure on buyers. This historical backdrop highlights that both administrations face unique challenges and economic dynamics. Looking forward, Trump's second term may bring a mix of short-term economic growth and possible long-term inflation risk. Under Trump's renewed leadership, several economic initiatives are expected, which may influence real estate. Trump's focus on reshoring manufacturing jobs, lowering taxes, and supporting traditional industry may stimulate job growth and consumer spending in the short term. More jobs and higher incomes could strengthen consumers' purchasing power, boosting the housing market in areas where new economic activity is concentrated. While these policies could spark job growth, they also risk long-term inflation, especially if trade tensions increase. Higher inflation may lead to rising interest rates, which could affect mortgage rates and consumers' purchasing power, making homes less affordable in the long run. If Trump's economic policies improve job growth and wages, consumers may be able to afford homes even with higher mortgage rates and construction costs, especially in population dense cities like San Francisco Bay Area, New York, and Seattle. However, a key concern is Trump's unpredictable decision making style, which in his first term led to sudden tariffs and unexpected policy shifts that disrupt certain sectors. This unpredictability could introduce volatility in the money market, which would affect areas like interest rate or construction regulations, creating a climate of uncertainty for both buyers and developers. Given these complex factors, the housing market outlook in the short term appears cautiously optimistic, with a continued supply shortage likely keeping demand stable. Here's some practical advice if you're thinking about buying or selling real estate in the near future. For buyers, waiting for rates to drop may be unpredictable. As the saying goes, marry the house, date the rate. If you find a home that you love and can afford, it may make sense to buy now, even if rates are kind of high. And for sellers, it remains a strong seller's market currently, especially in the Bay Areas. October sales data shows that homes in major counties like San Mateo County, Santa Clara County, and Alameda County are selling in an average of 20 days, with slight price increase from September. With realistic pricing and effective marketing, now is a good time to sell. What are your thoughts on Donald Trump's return and its impact on home prices? Will housing become more or less affordable? Let's discuss that in the comment below. That's it for this video. If you have any question regarding buying or selling real estate here in the Bay Area, don't hesitate to reach out. I always love to help. Thanks for watching and see you on the next one.